All right, everybody, get ready because we are going deep today into Alok Industries Q3 FY25 financials. We've got all the official documents, the filings, the disclosures, and let me tell you, these numbers, they paint a pretty interesting picture. You know Alok's had a wild ride, coming back from insolvency like they have.
It's
So the question is, are these financials a sign that they're, are they on the road to recovery or are there some warning signs that we should be watching out for?
Yeah, well, one of the first things that kind of jumps out at you is, you see, Alec reported a standalone revenue of 822.17 crore for Q3. But then when you add in the subsidiaries and joint ventures, that consolidated revenue jumps up to 863.86 crore. Now, the interesting thing is that this is all happening while they're still showing a net loss,
Mm.
both standalone and consolidated, 242.95 crore standalone, and a pretty big 272.99 crore on a consolidated basis.
So revenue's going up, but they're still in the red. That's kind of a mixed message, don't you think? Especially for a company that's, trying to make a comeback. Is this a sign that they're, I don't know, maybe they're pushing for expansion, even if it means taking a hit on profitability? Or is there something else going on here?
Well, it's worth pointing out that ALOC actually flagged some exceptional items in their financials. You remember that tornado that happened back in July?
Oh, yeah.
Well, it turns out ALOC's spinning plants, the ones in Silvassa, they took a pretty direct hit from that. And they're estimating the damages at around 61.42 crore.
Oh, wow, yeah. I remember that tornado. It really tore through the area. I bet that had a pretty big impact on their numbers.
Oh, absolutely. That kind of unexpected event, I mean, it can really throw a wrench in things,
Yeah.
even if you've got the best plans in place. Now, the good news is, ALOC's management, they were smart. They've already gotten a 55 crore on account payment
Mm-hmm.
from their insurance company.
Oh, that's good.
Yeah, but it does. I mean, it makes you wonder, like, they seem to have their risk management. They're on top of that. But could this be a sign that maybe Ellick's a little bit vulnerable, especially given everything they've been through, with their financial history and all this?
Yeah, that's a good point. And speaking of vulnerabilities, can we talk about the elephant in the room? That debt, 24,455.42 crore. I mean, that is a lot of debt, even for a big company like Alok.
Right, it is a huge number. But here's where things get a little bit tricky. Because of the way their resolution plan is structured, they're not paying interest on a big chunk of that debt. Like we're talking about 17,384.02 crore.
Hold on, wait a second. So they've got this mountain of debt,
Yeah,
but they're not paying interest on, like, most of it. I mean, I guess that's a good thing, right? It's got to be giving them some breathing room
yeah.
to get back on their feet. But what happens when that grace period ends? Doesn't that turn this whole thing into, like, a ticking time bomb?
Yeah, I think you've hit the nail on the head there. It's true. This arrangement, it helps them out right now, gives them some relief, but the debt's not going anywhere.
Right.
A log could be in for a really rough time. When they have to start making those interest payments again,
Yeah.
it really raises some questions about their long-term strategy. Are they banking on like super fast growth to kind of get ahead of this debt? Or are they maybe thinking about other options, like selling off assets or refinancing? These are all things investors are going to be watching very closely.
It's a tightrope walk, isn't it? One wrong step and
Yeah.
could be trouble.
Exactly. And that's why it's so important to understand this revenue growth that we were talking about. Their revenue from operations, it's actually up. Compared to the same quarter last year, they brought in 2,643.68 crore in Q3 FY25, which is a big jump from the 12,017.20 crore that they had in Q3 FY24.
So even with the losses and with this debt hanging over their heads, they're still seeing revenue go up. What's driving that? Is this a sign that they're actually gaining some real strength in the market? Or is it just, a temporary bump?
That's the question, isn't it? And to really get to the bottom of that, I think we need to dig a little deeper. We need to figure out where exactly this growth is coming from.
Okay, so we need to break this revenue growth down. What can you tell us about the different parts of Alok's business?
Well, Alok's a pretty interesting company because they're involved in pretty much every single part
Mm-hmm.
of the textile process. It's not just like they're making clothes, they're producing yarn, they're processing fabric, they're even manufacturing the garments themselves.
Mm-hmm.
So this vertical integration, I mean, it could be a big reason why they're seeing this revenue growth.
So they're not putting all their eggs in one basket.
Exactly.
That makes sense. But which of these,
Yeah.
which of these different parts of the business are really contributing the most to their top line?
Right. To answer that, we'd really need to look at their segment-wise revenue breakdown. But unfortunately, ALOC's Q3 report,
Yeah.
it doesn't give us that level of detail. So It makes it a little bit harder to pinpoint exactly what's driving the growth.
Hmm. That's too bad. But even without having all those specifics, can we make some educated guesses based on what we know about ALOC and what's happening in the textile market in general?
Yeah, I think we can. For example, we know that there's this growing demand for sustainable textiles, right?
Hmm.
And for textiles that are produced ethically. So if ALOC's been,
Hmm.
kind of positioning themselves in that space, I mean, that's part of the reason why they're seeing this growth.
That's a really good point. I mean, consumers are definitely becoming more and more aware of, where their clothes come from and how they're made. So ALOC's been focusing on sustainability. That could be a big advantage for them.
Yeah, exactly. And don't forget, we're talking about the quarter that ended on December 31st, right?
Uh-huh.
So that includes the holiday
Oh,
season,
yeah. Good point.
which is always a big time for retail sales,
Yeah.
including textiles.
Yeah, absolutely. So even though we don't have all the details, it seems like there's a good chance that ALOC's revenue growth is being driven by, a combination of things like their business model, their potential focus on sustainable products,
Yeah.
and then just the natural boost that they probably got from holiday shopping.
Right. It's kind of a multifaceted situation.
Yeah.
And without more data from ALAG, it's tough to say for sure which of these factors is having the biggest impact.
Okay, fair enough. But we can't forget about that debt. How does this revenue growth, no matter where it's coming from, how does it affect ALOC's ability to manage that massive amount of debt?
That's the big question, isn't it? You would think, in theory, that more revenue would mean more profit, and that would give them more money to start chipping away at that debt, right?
Right.
But remember, they're not paying interest on a lot of it right now. So this revenue growth, it might be going towards other things, like operational expenses or investments, maybe even building up a cash reserve so that they're ready when those interest payments do come due.
So it's like a balancing act.
Exactly.
They need to generate enough cash flow to handle that debt, but they also can't afford to just stop investing in their future, especially in an industry as competitive as textiles.
You got it.
It's a tough spot to be in.
Yeah, it is. And that's why it's going to be really interesting to see how LLOC allocates its resources over the next few quarters. Are they going to focus on paying down debt, or are they going to double down on growth? I think their decisions are going to tell us a lot about how confident they are in their long-term prospects.
So what are some of the key things that we should be looking at, to gauge how well they're handling this situation?
Well, I think the first thing is we need to see if this revenue growth is sustainable. Is this just a one-time thing, or is it the start of a trend?
So can they keep this momentum going?
Exactly. We also need to look at their profitability margins. Are they actually making money from all this revenue?
Right, because revenue without profit isn't going to help them with that debt.
Exactly. And then another important metric is their debt-to-equity ratio. This is going to give us a sense of, how much they're relying on debt to finance their operations.
Okay, so revenue, growth, profitability, and debt-to-equity ratio.
Yep.
Those are the big ones to watch.
Those are the key indicators. And of course, any news about their plans for restructuring their debt or how they're going to handle those interest payments. That's going to be crucial information for investors.
So it sounds like ALOC is kind of at a crossroads. They've shown they can bounce back. They came back from insolvency, but now they've got this huge debt. And at the same time, they're trying to grow.
Yeah, it's a tough situation. And to make things even more complicated, the global textile industry, it's facing a lot of challenges right now, like raw material costs are going up. There are all these supply chain problems. And then you've got competition from other countries that are producing textiles.
So even if ALOC, even if they manage their debt and they keep this revenue growth going, they're still operating in this really volatile market.
Exactly. So the question is, what can they do to not just survive, but to actually thrive in this environment?
Right, because they can't control global commodity prices or what's happening in geopolitics. So what can they do? What are some of the things that are within their control?
Well, I think one thing they could do is focus on innovation, investing in new technologies. That can make their manufacturing more efficient and help them lower their production costs.
So even in an industry like textiles, which has been around for, forever,
Right.
technology can still make a big difference.
Yeah, absolutely. I think another thing they could look at is their product portfolio. Maybe focusing on high-value textiles or specialized products, targeting niche markets where there's less competition.
So instead of trying to be everything to everyone, they could find like a specific area where they can really excel.
Right.
And we've talked about sustainability before.
Yeah, that's a big one.
I mean, Alok's already doing some things in that area,
They are.
but they could go even further.
Exactly, like investing in even more eco-friendly materials and making their production processes even cleaner.
So sustainability is not just, it's not just good for the planet, it's good for business too.
Absolutely. Consumers care about these things now, and investors do too. A strong commitment to sustainability can make a company much more attractive.
So we've got innovation, we've got specialized products, and we've got sustainability. Those seem like the key things for Alok to focus on. But what about the debt? Is there anything they can do to deal with that more directly?
Well, they could explore things like debt restructuring or refinancing,
Mm.
which could involve, negotiating lower interest rates or extending the repayment period.
So basically giving themselves
Yeah.
a little more breathing room.
Right. But these options, I mean, they come with their own risks. It's a delicate process.
Yeah, for
It
sure.
has to be done very carefully.
Yeah. Okay, so we've covered a lot of ground today. Alok's Q3 financials. They show some growth, but there are still some big challenges. And there's a lot of uncertainty about the future.
That's a good summary.
What's the main thing you want our listeners to take away from this deep dive?
I think the main takeaway is Alok's story isn't over yet. I mean, they've been through a lot,
Yeah.
and they've shown they can adapt. But the next chapter is still being written, how they handle this debt, how they take advantage of the growth opportunities, and how they adapt to this changing market. I think that's what's going to determine whether they're ultimately successful or not.
It's a fascinating story. I mean, it's a great example of how a company can overcome adversity. But it also shows that, the journey is never really over. There are always new challenges, new decisions to make.
That's the world of business, right?
Exactly.
Right.
Always changing.
For anyone who wants to learn more about Alok's financials, we've included links to the full reports in the show notes.
You can do your own deep dive.
All right, that's it for today. Thanks for joining us, and we'll see you next time for another deep dive.